Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Friday, October 12th, 2018. Just want to go over the broad markets quickly and get a video out there for both members of the site and as well as YouTubers. I really appreciate the comments. I don't have a chance to reply to the comments on the YouTube channel. Very rarely I do, but as my priorities have been to, both my trading and to members of the site. And last couple days, the market updates have been pretty frequent, but I've wrapped them in with a lot of member-only content, things that we're looking at, gold, treasury bonds, commodities, things like that. So I want to do a quick update for everybody. Members of the site, this will be not really much different than I covered last night. I might cover a few levels in the futures that I didn't hit on. But here's my I guess the most salient points right now. Since Wednesday, I've been expecting a green close in the markets either yesterday and or today. Well, we didn't get it yesterday. Um, Qs were still down another day, but I still do expect. And as of now, futures are up, but that doesn't mean a lot. I'll go over that in a second. We saw, just in the last hour or so of trading, I saw a move that, QQQ ripped up over 2%, about two and a quarter, down over a percent in just about an hour. So that the price swings are the volatility's up, and keep that in mind with your position sizing. If you're having a great time trading this market, great, more power to you. Just don't think that it'll last forever. Volatility at some point will abate, but right now we're still in that high volatility phase. So keep that in mind with your position sizes. And of course, if you're having a hard time with the market, remember that as well. On QQQ, for example, if you're an NQ trader, every point you on every percentage gain or loss on NQ is about $1,500. So in that last hour of trading yesterday, here I'll show you the moves. Here, we had a rip here, 2.4%. So there's about, what is that, 4 grand or so per contract in just what is that, 35 minutes, and then we turned around and dropped over the next 29 minutes, 1.4%. So over $2,000 per contract. And again, it's relative to what you're trading. If you're trading QQQ, TQQQ, leverage is just it's simply a function of the math there. But that's point is these are big swings. They're not, at least sometimes I have a field day trading intraday charts. Had struggled with a trade yesterday, trying to catch the bounce on QQQ, but I still, I'm still, and I made it clear on the site. Yes, I'm going home. I went home long because we're looking at least a brief bounce here, consolidation. So let me share my thoughts, and we'll wrap this up. What I'm looking at here is I have support, a pretty decent support level here on QQQ at about 169.60. This is a daily chart of QQQ. Keep in mind when I'm covering these charts right now that look like this, these are end of day charts, end of day yesterday. It's not reflecting pre-market. I'll get to the futures here in a second, and that'll show you what we're looking at. So what stands out to me? So we have a sharp, pretty sharp, well, a very sharp impulsive move down. We took out 178, and you notice how that flag that I mentioned the other day, that bear flag, came right above that 178 support level. You can see it's a pretty well-defined support level. Flagged, broke it, took it down impulsively. We also took out that trend line right there, that orange trend line. So we kept going, and they parked it right on. And again, I haven't modified this trend line. You can see in the pop-up box, I created that trend line back over a month ago, September 6th there, and has not been modified. So this is not pure coincidence. Look where they parked the Qs, right on 169.60 on that trend line. So where I'm going with this video, I think where they're going to park it today is on or around this 200-day moving average. I think it's a very key. Some people use a simple moving average. I like the exponential, but I can tell you they come in right at. I checked them last night. They come in together real close right now. So we'll just call it the 200-day moving average, whether you're using a simple or an exponential. A very important level for QQQ, and a level from my experience, like I've talked about throughout this week. There's some long-term trend lines that were also broken. But from what I've seen in the past, when you have a sharp move down and you haven't visited those trend lines in a while, let me just get to those and show you. Here's the trend line I'm referring about to QQQ on QQQ. It comes off the mid 2015 lows, lots of reactions along the way, and as I often talk about, the more reactions, the better defined that trend line is, more eyes are watching it, and the more technically significant it is. What does that mean? Technically significant means the more likely you are to have reactions on it when you pull back to it as support, and or when it's broken, support once broken then becomes resistance. That's a sell signal. So again, this is why I put so much emphasis, especially at this point in time, on the weekly charts. So what happens to a lot of eyes, this is a breakdown of a weekly level. And it may be, and like I said, this is very dangerous here, trying to game a bounce. I've said that before. It's like picking up nickels in front of a steamroller, because I emphatically feel there is more downside to come in Q4 and possibly beyond. That means for the rest of the year. However, it is quite common to see intra-week breaks of key support levels, only to see the market or the whatever security you're trading close back on that on a weekly closing basis. So this is a weekly trend line. All that matters are weekly closes. So my expectation is they park it back either on this trend line, which wouldn't surprise me at all, or at least that 200-day moving average, which is the same as a 40-week moving average. There are 5 days in a week, so if you divide 200 by 5, you get 40. That's why a 40-week moving average on your chart is the same as a 200-day. So there it is, and so that would give us a little upside to get back to park it on or around. And I'm not talking to the penny. Wouldn't shock me if it does. Just like I showed you that support level that we dipped below intraday yesterday, and that was a daily chart we were looking at a minute ago. I'm referring to this one right here. See how we went through 169.60 and then they reversed it by end of day and parked it right back on there. It's just how TA works very often. So there it is. You have the a little bit of upside to get to that 200-day, about 1.1%, about how much we're probably up right now in the futures. I'll check those in a second. And if they park it on or around that trend line, that's about 2.45%. Neither of those two would shock me. But nor would I be shocked, completely shocked, using that word literally, if we, closed down today and just took this out, because as I said, this has been a lot. This is a very extended run. Valuations were crazy. Sentiment was crazy high. But I'm not leaning that way. I'll tell you, it's possible, and that's why you need to be careful. Use stops in this market. Whether you're short and bearish, bullish and long. Uh, if you've been on the wrong side of the trade for even just one day over the last week, you probably learned in an expensive way if if you weren't managing your position sizes as far as how large of a size to account for this additional volatility, and or your stops as well. So it's been very profitable trading week. For me for the last couple of weeks, and I know a lot of people on the site, and it can also be frustrating for others. So just be careful, is I guess what I'm trying to say. And we're heading into weekend too. So whatever you do today, whatever positions 4 o'clock you take home, this market is most likely going to gap one way or the other on Monday. So it's going to either be for or against you. So, all right, so there it is. Long-term picture, these big divergences, the breakdown of this wedge, and now testing key trendline support. As far as this correction goes so far, from yesterday's, from the highs to yesterday's close in QQQ, or even, I'll even go down to the lows, it was about 10. I'm just rough estimating here with this measuring tool, about 10% or so, which is about in line with these other ones. They were a little 12% right here from high to low. So there's certainly more to go. And this time around, before all is said and done, I think we get more downside. But like I said, I think the risk reward right now, especially to new short positions, is I don't want to use the word abysmal, but very unfavorable, because the odds for a counter trend bounce are sharp. And let me get to daily charts and show you there, and then I'll jump over to the SPY and we'll wrap this up after doing the futures too. Here's what I mentioned to members on the site yesterday in my last update. We are extremely oversold. This is the RSI, for those of you not familiar, the relative strength indicator. It shows you how overbought or oversold a security is. Anything 70 or more, that red line, is considered overbought, while anything 30 or less is considered oversold. This is a pretty extreme reading, especially for an index. So we're just under 22 on the daily RSI. We haven't seen that level in years. This is a 2-year chart, and you can go back even farther, a year or so before that, you won't see a reading like this. So very oversold. And what happens is the stock market or most securities, they're like a rubber band. You can stretch that rubber band. The longer you stretch it, the more likely it is to snap back. But I've said this too many times. Oversold or overbought in itself is not a buy or a sell signal. It's merely an indication you're getting stretched. A snapback rally increases, the odds increase the more oversold you get. And here's those other two readings. We just came down close to almost to that 30 level, and that ended both of those previous pullbacks. But again, this one has more built into the chart. So again, I think we're going lower. But to put it succinctly, I think today we park it green on or around the 200-day, possibly back up around this trend line, maybe a back test from below. We might even get a short op soon. I think the shorting up might come next week if we get it, but we may not get that. We may not get what we want. I said that before. Market doesn't give you what you want, at least not always. But a nice scenario would be anytime between now and next week or so, bounce back to both that orange primary trend line right there and that 178-ish level. But I think a lot of eyes are watching this one, so I'd be more apt to shorting before we got all the way back there if we do. So again, that would just be a very objective shorting up. We'll have to look at the intraday charts. The problem is I don't see a lot in the intraday charts that right now indicate we're going to bounce that far, or we can bounce that far. Anything's possible, and if not, I've said it since before the highs here. I've been saying it for months now. I think at some point in 2018 we come back and we revisit, retest, at least retest, probably take them out sooner or later, but retest those lows back from earlier in the year with those first two corrections around the 154-ish, 154.50-ish level. So again, extremely oversold. Not a lot of buy signals, really no buy signal. I don't see much other than the market is oversold at support, both price support and right around, and again, in close enough proximity to that key 200-day moving average, 40-week moving average. Look at SPY. The S&P 500 is actually even more oversold. Nasdaq was the one. This was at first a tech wreck, and that's what I said for a long time watching XLK day after day after day for the last couple of weeks. We got to see tech break. I have to see tech break, and sure enough, once tech broke, there's XLK. There was my wedge. That was our sell signal right there on this break. Went down. We flagged right above this more important, more significant trend line, and then boom. And look where we're at, right down. And again, these are not lines I just added. This line back on September 7th. So before we even topped, well before we topped, this level was identified as a likely stopping point for a pullback. Not arbitrary. Lots of reactions around that level. And so there's another key sector to support. This is the largest sector of the S&P 500, by far the largest of the Nasdaq 100. So you have it at support, very oversold. Really no buy signals other than that, but again, it's about risk reward. Do you want to short here, or do you want to stay short and risk a short covering rally, counter trend bounce? It could take back 2-3%, possibly more of your profits. And again, if this morphs into more, if we do reverse here and it morphs into more, and the charts start to confirm, there could be more legs. But right now, that's all I can see is at best an oversold bounce and then more downside. And you can see some targets there. So that's XLK. And then back to SPY, really the broad market itself. So again, the broad market, played a game of catch up. Uh, these big beloved tech stocks, they started out this party on the downside, but yesterday you saw the rest of the market catch up, with the S&P dropping 2.2% and right down again to some key support level. This is a support zone. When I have two support levels in close proximity, I refer to that as a support zone. So well defined, and again, I would put very good odds that we reverse today. Futures up, but that means nothing. They've been up, down. If you've been trading recently and you watch the futures, it means virtually nothing if we're indicated to gap up or down. How that day is going to close, I just showed you a minute ago what the daily ranges, and that was just in an hour of trading. That 2.25% rip followed by a 100% dip on the Qs. So anyways, that's it. So looking for just a little pause here, work off these overbought conditions. Nothing that you can bet the farm on because we've seen some very ugly technicals recently, some damage to the charts, I should say. I could draw. Also, there's another potential trend line right there. I've got a nice uptrend line we're at. So too many support levels. And again, although that 200's been taken out on the S&P 500 40 week, it's in close enough proximity that I think they'll park the indexes there to keep everybody guessing for the long weekend. And also, on a final note of that, I had somebody ask on the site yesterday, hey, should I be long or short here? If and I mean this in all sincerity, if you have to ask that question, then the best trade is no trade at all. I know these are big moves, big daily gains, but and it, it's it's you don't have to be in this market if you don't know what to do. Stand aside and wait for the more objective entries, which whether that the next objective entry is a long entry down here maybe, or a short entry on a kickback. That's the best play at this point in time because the risk reward to shorting here isn't that good, but yet the charts indicate more downside, and we don't have really any buy signals or high probability entries, at least for a swing trade on the long side. And that's the other thing I want to mention. You have to differentiate your trading style. I post a lot of stuff, especially in the trading room on the site, and I wear multiple hats: day trader, active swing trader, regular swing trader, meaning trades lasting weeks to months, trend trader. A bounce trade, which is what I'm looking for today and possibly into next week. We'll see about that. I don't probably plan to hold anything going into the weekend as far as broad market shorts. We have plenty of, well, not plenty, but we actually closed out quite a few of our official trade ideas on the site. This week we've had price targets hit on a lot of things, and that's the other part of it too. We had, for example, we were short the small caps with via TWM, which is a two-time short trade, and we hit our final target the other day. You can see the resistance there. That was for a nice trade. We were shorted here on the break of that wedge, which was really just a play off of IWM breaking down. And this is something I posted way back when we were here in this wedge correction, meaning simple wash, rinse, repeat stuff. Correction down here. There was a divergent high before that correction, divergent high correction, divergent high correction, divergent high correction. I mean, I don't mean to oversimplify it, but it really is that simple. Look for the divergent highs and then wait for a break of a well-defined, some kind of sell signal. Could be a candlestick reversal pattern, could be, in this case, a nice bearish rising wedge, and that's what you get. So here's another, this is not a sector, it's an index, small cap index, that's at support. But before all said and done, I think there's more downside to it. And I just can't at this point in time say with a high degree of certainty if we're just going to keep going down without much of a kickback and hit those levels. Certainly can't rule it out, but again, when you get this stretched on the RSI, on the daily charts especially, then the odds for a bounce are pretty good. QQQ, I don't even want to look at QQQ and SPY 60-minute charts. There's just not enough there to point out. So I'm just focusing right now on these daily charts and weekly charts. And this is a weekly chart of SPY. There's your bull market uptrend line off the 2009 lows, 40-week moving average. So that's where I'm looking for them to park it. We'll look at the futures and we'll wrap this. Okay, this is the ES or S&P 500 E-mini futures daily chart. There's a trend line, the preferred trend line, the white one, the BOD benefit the doubt trend line, which comes and captures those other reactions. There was a support level, so we broke trend, we broke that other trend line, flirted on it, flirted with a key horizontal support level, and then boom, broke it, gave up the ghost, came down, and you can see I have two support lines here. We went down almost to that bottom one and then bounced so far. You can see the futures better when I zoom in here. Let's just do that now. Let's go to a 2-hour period chart. Goes back a little farther. All right, so bigger picture on the S&P 500 futures. Here's a trend line right here, divergent high. We broke it, and that's what I was waiting for. QQQ, which I'll get to in a second, or NQ, the Nasdaq 100 futures. They broke down well in advance, back tested forever, waiting for the broad market to come down. Because as I said, you're not going to see a sizable correction in one of the two large cap indexes, or the major ones. I don't focus much on the Dow; it's only 30 stocks. So I look at the S&P and the Nasdaq 100, and you're not going to see one of them drop 5, 10% and the other one go up or stay where it is. There's too much overlap. Most of the top components in the S&P 500 are also the top components in the Nasdaq 100. So there it is. That broke down. That gave us our sell signal there. And you can see the impulsive move. But the point is, what I'm trying to show you here are support levels, and you can see these lines. And so we're quite oversold. Uh, Not that, this move wasn't priced into the charts. It happened pretty quick. And we just fell shy of that support level. And you can see this line here also has a lot of reaction. So these lines are all salient levels that I think. And so we've come back up and there's resistance. This is what I want to show you. These two lines together right here, there's a lot of reactions there. So this is a pretty key level. The S&P might not be able to see, the futures are still below that level. They failed there yesterday. If you're looking for another leg down today or into next week and you're willing to ride out some pain, this is your first objective shorting level right here. If you're a bull and you're looking to maybe go long on a breakout of resistance, maybe go long on a break above, it's about roughly 3,000, the level 3,000 on the futures. You can see there 27.97 is what I have. So there's a little reaction above there, right about 27.98 or so. No, 2,800, yeah. What did I say? 3,000? No, I'm sorry, 2,800. So yeah, break above 2,800 will take out the recent highs. Could open the door for a move back up here, and that would be a really nice shorting level there, about 2850 on ES. And let's go to NQ and look at that real quick. All right, so this is a 2-hour chart, 120-minute candlesticks. There's your trend line. Again, goes off the early April lows, I believe it is. Yep. And it was just a beautiful trend line, breakdown, back test. We've covered this on a daily basis to back test, back test, back test, and then that little wedge set up, and then we got the sell signal when that wedge and the S&P 500 or ES broke down, and that was all it needed. Boom. So there we go. We overshot this support level. It's about 70, what is that? 71, 70.10. Overshot it by just a hair. It was a momentum fueled overshoot yesterday. Recovered it. So that's support. These are the two levels we're wedged between right now. If you want some salient levels on the NQs, it's pretty much today's highs. That might have been the overnight session right there. We hit the top. There's support, or I should say resistance right there. And that level is about 71.70. If we take that out, I can add minor resistance here. Let me give you some micro levels if you're an active trader right here. Yeah, so that would be your first objective shorting level or a target if you're looking for a bounce. That's about 73.08. It really gets tough above there. A lot of overhead supply. I don't think we'll get much above that anytime soon, but anything's possible. You can just take a look at these levels on the chart. And finally, let's just look at a daily chart. Uh, Here it is going back. This is a trend line that goes back to early 2016. Again, we broke that trend line recently, yesterday and the day before, but look, futures have already snapped back up there right now, and so that's kind of the thesis, or I guess the theme, I should say, of this video is I'm looking for an overshoot this week, as I had been, of those levels, the 40-week moving average, the 200-day moving average, those trend lines, and then maybe park it here to keep everybody guessing into the weekend. So, and where we go from there. Hmm, hard to say, but maybe it wouldn't surprise me to see a few days of consolidation. But again, it's just not worth betting on it into the weekend. And at most, we're looking probably a bounce up to about right here, this level here. What is that? About 7,300 on NQ when you look at this resistance level here. All right, I think that's about it. Yeah, that's all I wanted to cover. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed the video, and as always, a thumbs up on YouTube is always appreciated. Thank you.